Welcome back to Alpha Recap, your quick aftermarket rundown from stockalpha.ai. We're wrapping up a busy session, and as always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, glad you're with us. Big day of beats, misses, and a fair bit of policy drama. So much to unpack.
Totally. Markets closed with a bit of a split personality today. Some strong beats in autos and energy, while AI-linked names in aerospace came under pressure.
Right, and what really stands out here is the OpenAI news. Reports said OpenAI missed its own user growth and revenue targets, and that rippled through names like Oracle and some chip stocks.
Yeah, when a big AI vendor underperforms, investor models that assumed steady, outsized AI spending got repriced pretty quickly. It's a reminder that AI optimism is colliding with monetization reality.
Hold on, say that again. So the idea is, if OpenAI slowed, investors started doubting the near-term revenue lift for companies that supply the AI stack?
Exactly. Many models baked in fast SaaS and infrastructure spend. If the top of that stack missed, the logic for high multiples on infrastructure names got questioned. At the same time, we had some real outliers on the positive side. General Motors reported a beat and actually raised 2026 guidance after getting a $500 million tariff refund.
And that was a big move. Shares jumped roughly 15% intraday and traded in the high 40s. The reported earnings per share came in at $2.80 versus about $2.31 expected.
That number really caught markets' attention, but we should be careful. Analysts were quick to note much of the guidance lift leaned on that one-time $500 million refund.
Right, which sparks the age-old debate. How much of this is recurring operational improvement, and how much is a one-off boost? Traders rewarded the news, but longer-term models need normalization.
And then energy rallied. BP's American depository receipts rose about 3.7% to $47.65 after first-quarter profits more than doubled on higher oil prices tied to shipping disruptions in the Strait of Hormuz.
That linkage is pretty straightforward. Geopolitical risk pushed crude prices, and energy margins widened quickly. But of course, those gains can reverse if shipping normalizes.
Exactly. We saw a clear sector divergence today. Autos and energy showed strength, while tech names tied to AI and aerospace lagged.
And Airbus was rough. Adjusted operating profit fell about 52% to 300 million euros, and net profit dropped about 26% to 586 million euros. Not a great day for aerospace.
That deterioration in profitability was tied largely to slowed deliveries. When aircraft deliveries slow, revenue recognition and supplier cash flows ripple through the entire supply chain.
Which means you're not just watching Airbus, you're watching suppliers and backlog timing too. Those delivery cadences matter a lot for near-term cash flow.
Another interesting name, Corning. It snapped back after a blistering rally. Coverage referenced headline metrics above 400%, and post-earnings repricing was underway.
Yeah, big volatility there, and it shows the kind of dispersion today's tape produced. Big winners and some clear losers.
Let's touch regulatory risk, because this came up in several spots. The FCC accelerated review of Disney's broadcast licenses and explicitly cited concerns tied to diversity, equity, and inclusion policies. That added uncertainty for media valuations.
And over in China, regulators blocked a deal involving Meta's Manus, a clear sign that cross-border AI M&A risk is elevated. That's a big warning for dealmakers.
Then you had the NHTSA opening a probe into missing steering bolts on some Tesla Model Y vehicles from 2023. When safety probes like that land, they become another headline that can affect sentiment.
Right. So we've got AI monetization questions, delivery and execution problems in aerospace, plus a rising policy and geopolitical theme. Mix that in with discrete accounting events, and you have a very noisy tape.
Which leads us to the synthesis point. Analysts are split. Morgan Stanley's strategist argued that earnings resilience and rising estimates could support the rally, shifting the narrative away from a systemic shock to selective upside.
But the OpenAI miss, Airbus's weak profits, and regulatory shocks create a compelling counterargument. So the debate is whether the market's momentum is fundamental or a reflexive re-rating that could be fragile.
And that's why we keep coming back to the difference between one-offs and recurring trends. GM's guidance bump was real, but much of it rested on that $500 million refund. BP's profit surge tied to higher oil prices is cyclical and geopolitically driven.
Analysts were saying, you need to strip out those discrete items when you build a multi-year model. Otherwise, you risk overstating sustainable cash flows.
Quick aside, some other beats today. UPS beat on revenue, reporting about $21.2 billion versus estimates around $21.08 billion. And Visa again showed resilient spending trends supporting fee growth.
Alphabet closed the session near about $313, up from a prior pivot around $296. Investors will be parsing Alphabet's upcoming results for concrete AI monetization signals.
So what does this mean for different investor types? Long-term growth investors still see structural appeal in AI, but the OpenAI miss and regulatory headwinds argued for closer scrutiny of revenue conversion metrics. Recurring revenue is what matters.
Value and income-focused investors saw a reaffirmation of the role of energy and payments in portfolios. But again, one-offs like tariff refunds or commodity spikes need to be normalized for valuation work.
Active traders and momentum players had a lot to work with today. Big intraday swings in names like GM, Corning, and BP. But that also increased volatility risk.
And risk managers were reminded that policy and geopolitical headlines, FCC actions, China's M&A blocks, NHTSA probes, can move capital flows independently of operating performance.
Looking ahead, there are a few things analysts said to watch closely. Alphabet's upcoming earnings for AI monetization clues, chip inventory and software bookings after the OpenAI miss, whether GM's guidance hold up beyond the refund, energy prices tied to geopolitical events, and Airbus's delivery cadence.
Plus, regulatory filings and enforcement actions. Those are the event risks that can change valuations overnight.
Real quick, 3 short takeaways before we sign off. 1. AI optimism ran into near-term monetization skepticism today. 2. Some sectors showed real earnings resilience, but a few of those positives leaned on one-offs. 3. Policy and geopolitics bumped up headline risk, so scenario analysis mattered more than usual.
Yeah, that tracks.
Big move.
Honestly, I was a bit surprised by how quickly markets repriced AI supply chain names after the OpenAI report. It was a sharp reminder that expectations live in prices.
Same here. Analysts note that distinguishing recurring operational trends from transitory items is the core task after a session like this. Today's tape rewarded that discipline.
All right, that's our wrap. If you want to dig deeper, remember, this is informational analysis, not investment advice. Analysts highlighted the key catalysts and urged active risk management.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for joining Alpha Recap. We'll be back after the next close with more takeaways from the tape. Bye for now.